Hi, this is Bud from the Aim High podcast. Did you know real estate investors legally pay $0 in taxes? In this video, I'll show you how this is possible and how you can take advantage of these tax strategies.
Tax planning is crucial for maximizing returns in real estate investments. By understanding and leveraging tax laws, you can save significant money, boosting your overall profitability. Many people have misconceptions about real estate taxes. They often think that taxes are inevitable and can't be minimized. However, you can significantly reduce your tax burden with the right strategies. Proper tax planning involves knowing the deductions and credits you are entitled to and how to use them effectively. Let's explore the various tax deductions and credits available to real estate investors. These include depreciation, which allows you to deduct the cost of your property over time, reducing your taxable income. Interest on mortgage payments is another big deduction. You can also deduct property management, repairs, and maintenance expenses. Additionally, there are credits for energy-efficient upgrades, which can further lower your tax bill. One key strategy real estate investors use to reduce their tax liabilities to zero legally involves using depreciation. Depreciation allows you to write off the cost of your property over several years, often resulting in a significant reduction in taxable income. Another strategy is the 1031 exchange, which lets you defer paying taxes on profits from a property sale if you reinvest those profits into a similar property. Additionally, investors can take advantage of pass-through deductions, which allow them to deduct up to 20% of their qualified business income. Employing these strategies can greatly lower your tax liabilities. Depreciation, for example, can turn what appears to be a profitable property on paper into a break-even or loss for tax purposes, eliminating your tax bill. The 1031 exchange helps you grow your real estate portfolio without immediate tax consequences, and pass-through deductions reduce your overall taxable income.
Tax planning in real estate investing offers numerous benefits, including significant tax savings. Understanding and applying these deductions like appreciation, utilization of the 1031 exchange, and taking advantage of pass-through deductions can help you legally pay $0 in taxes. But always seek professional advice to ensure that you maximize your tax benefits and comply with tax laws. Explore more tax saving strategies in real estate by watching our other videos. Share your thoughts and experiences in the comments section below. Don't forget to subscribe for more tips on how to boost your real estate investments and find out tricks in finance. Until next time, aim high.